NVIDIA stock went up 3,000% in 5 years. 3,000%. If you invested $10,000 in NVIDIA in 2019, you'd have over $300,000 today. That's not a stock, that's a lottery ticket that actually paid off. But here's the question that keeps Wall Street up at night. Is NVIDIA the greatest investment in history, or the greatest bubble since the dot-com crash? I'm going to show you NVIDIA's real financials, the numbers that bulls and bears fight over every single day. And by the end of this video, you'll know something that most investors don't. There's one number hidden in NVIDIA's earnings report that tells you everything about whether this stock is a buy or a sell. Stay for that number. It could change how you think about investing forever. Let's start with the numbers that make NVIDIA look like the greatest company ever built. And these numbers are not hype. They're audited financials straight from SEC filings. Revenue. NVIDIA generated $60 billion in fiscal year 2024, up from $27 billion the year before. That's a 125% increase in 1 year. Let me put that in perspective. It took Apple 15 years to double its revenue from $30 billion to $60 billion. NVIDIA did it in 12 months. No company this size has ever grown this fast in the history of capitalism. Profit margins. This is where NVIDIA becomes almost obscene. NVIDIA's gross margin is 75%. That means for every dollar of revenue, 75 cents is gross profit. For context, Apple's margin is 45%. Google's is 57%. Microsoft's is 69%. NVIDIA makes more profit per dollar than almost any company in history. The only companies with comparable margins are luxury brands like Hermes and Ferrari, companies that sell $50,000 handbags and $300,000 cars. NVIDIA sells $40,000 GPU chips, and the demand is so insane that companies are begging Jensen Huang for more. There are 12 to 18-month waiting lists. Companies literally cannot give Jensen money fast enough. Net income, $30 billion in profit in 1 year. 30 billion. That's more than Netflix, Uber, Spotify, and Airbnb's combined revenue. NVIDIA's profit alone is larger than most Fortune 500 companies' entire businesses. Free cash flow, $27 billion. This is the cash left over after paying all expenses, investing in R&D, and building infrastructure. $27 billion in cash that Jensen can use to buy companies, develop new products, or return to shareholders. It's an absurd number. Remember, this is the company that 3 men started with $40,000 at a Denny's in San Jose. The dishwasher's company is now more profitable per dollar than Apple. Let that sink in. The moat. NVIDIA doesn't just sell chips, it sells an ecosystem. CUDA, Omniverse, NIM, Isaac, Drive. Once a company builds on NVIDIA's platform, switching costs are enormous. It would take years and billions of dollars to migrate away. Every line of code written in CUDA is a line of code that locks a customer to NVIDIA hardware. This is the most defensible business model in technology, maybe in any industry. By every traditional financial metric, revenue growth, margins, cash flow, market position, NVIDIA isn't a bubble. It's a cash machine operating at unprecedented efficiency. But that's only half the story. And the second half is going to scare you. Now let me show you the numbers that terrify the smartest investors on Wall Street. Because these people aren't idiots. And when they're scared, you should at least listen. Valuation, the price of perfection. At $3.4 trillion, NVIDIA trades at 55 times trailing earnings. What does that mean? It means the market is pricing in decades of perfect execution. Not good execution, perfect execution. One bad quarter, just one, and the stock could drop 30% overnight. That's $1 trillion of value evaporating because of one earnings miss. For comparison, Apple trades at 30 times earnings, Microsoft at 35 times. Even during the dot-com bubble, most tech companies traded at 40 to 50 times earnings before they crashed. NVIDIA is above that threshold right now. Customer concentration, a dangerous dependency. Just 4 companies, Microsoft, Meta, Google, Amazon, account for nearly 40% of NVIDIA's revenue. 4 customers, 40%. If any single one of them decides to build their own chips, and all 4 are actively trying, NVIDIA's revenue takes an immediate and painful hit. This isn't theoretical. Google already trains its Gemini AI model on its own TPU chips, not NVIDIA hardware. Amazon's Trainium chips are being deployed across AWS. Microsoft is building Maya. Meta has MTIA. Every major NVIDIA customer is actively working to reduce their dependency on Jensen Huang. Imagine running a restaurant where 40% of your revenue comes from 4 tables. Now imagine those 4 tables are building their own kitchens at home. That's NVIDIA's customer concentration problem. Cyclicality, the semiconductor curse. The semiconductor industry is brutally cyclical. Every 3 to 5 years, there's an oversupply crash. Demand surges, companies overbuild, then demand drops and everyone drowns in inventory. It's happened in 2001, 2008, 2018, and 2022. NVIDIA's current demand is unprecedented, but so was Cisco's in 1999. Cisco was the backbone of the internet. Everyone needed routers. Revenue grew 50% per year. The stock hit $80 billion in market cap, making it the most valuable company in the world. Then the dot-com bubble burst. Cisco's stock dropped 86%. And here's the most terrifying part. 25 years later, Cisco has never recovered its dot-com peak. Even today, in 2025, Cisco's stock is below its 2000 price. If that happens to NVIDIA, a $3.4 trillion company becomes a $500 billion company permanently. The custom chip threat, customers becoming competitors. Every major hyperscaler is designing custom AI chips. Google's TPU v5 is competitive with NVIDIA's H100 for certain workloads. Amazon's Trainium 2 claims 4 times better price performance for inference. Apple designs its own neural engine. The trend is unmistakable. NVIDIA's biggest customers want to stop being NVIDIA's customers. The bears aren't crazy. History says that every monopoly eventually gets challenged. 1BM dominated mainframes for 30 years, then lost to the PC. Intel dominated PCs for 25 years, then lost to mobile. Nokia dominated phones for 15 years. Then Apple destroyed them in 18 months. The question isn't whether NVIDIA will be challenged, it's when, and whether Jensen can stay ahead long enough. Okay. Remember the number I promised you at the beginning? The one hidden in NVIDIA's earnings that tells you everything you need to know. It's right here, one line item. Most investors scroll right past it. It's the data center revenue growth rate, quarter over quarter. In Q4 FY 2024, NVIDIA's data center revenue grew 409% year over year. 409%. That's not a typo. And it's the single most important number in all of finance right now. Here's why this number matters more than any other metric. More than the PE ratio, more than the margin, more than the market cap. NVIDIA's entire bull case depends on one assumption, that AI infrastructure spending will continue to accelerate. The bulls believe we're at the very beginning of a multi-decade AI build-out, like the early days of the internet in 1995, or the beginning of the mobile revolution in 2007. If that's true, NVIDIA's revenue will continue to double or triple, and the stock is actually undervalued at $3.4 trillion. The data center growth rate is the real-time signal for whether that assumption is holding. If data center revenue keeps growing at 50% plus per year, NVIDIA is undervalued. Buy more. If growth slows to 20 to 30%, NVIDIA is fairly valued. Hold. If growth flattens or declines, NVIDIA is massively overvalued. Run. Every quarter, before looking at anything else, before the earnings per share, before the margin, before the guidance, look at that one number. Data center revenue growth. It tells the entire story in a single data point. Right now, in 2025, every major tech company is still in a GPU arms race. Microsoft is spending $50 billion on AI infrastructure this year. Google is spending $30 billion. Amazon is spending $30 billion. Meta is spending $40 billion. That's $150 billion from just 4 companies. And the vast majority flows directly to NVIDIA. As long as the arms race continues, Jensen wins. The data center growth rate stays above 50%, and NVIDIA's valuation is justified. The moment it stops, the moment companies decide they have enough GPUs, or that AI isn't generating enough ROI to justify the spending, is the moment NVIDIA's stock becomes vulnerable. And nobody on Earth, not even Jensen Huang, knows when that moment will come. But there's one more data point that might tell you Jensen's own opinion. And it's the most convincing argument in this entire debate. Here's the most telling data point in the entire NVIDIA debate. And it's not in any earnings report. It's in an SEC filing that most people never read. Jensen Huang personally owns $100+ billion worth of NVIDIA stock. Over $100 billion in one company. His company. He has never sold a significant portion. Not during the crypto crash in 2022, when the stock dropped 66%. Not during the pandemic uncertainty of 2020. Not even when NVIDIA hit $3 trillion for the first time, and every financial advisor in the world would have told him to diversify. Now, compare that to what happened during the dot-com bubble. In 1999 and 2000, the CEOs of Cisco, WorldCom, Enron, and dozens of other hot companies were selling their stock as fast as possible while publicly telling investors to buy. They knew the bubble was about to pop. They cashed out and left retail investors holding the bag. Jensen Huang isn't selling. He's holding $100 billion in a single position. Either he's too emotionally attached to make rational decisions, which is possible, or he genuinely believes that NVIDIA's best days are ahead of it. That the AI revolution is real. That the growth will continue. Given that Jensen has been right about every major technology bet for 32 straight years, GPU computing, CUDA, deep learning, data center GPUs, Mellanox, Omniverse, the smart money says he's probably right about this one too. NVIDIA's best days are ahead of it, Jensen said at the most recent earnings call, standing in his leather jacket with the same quiet confidence he's had since founding the company at a Denny's 3 decades ago. We are at the beginning, not the middle, of the AI revolution. Bubble or bargain, the data is inconclusive. The valuation is stretched. The risks are real. But the man who built this company, the immigrant kid who washed dishes and survived reform school and bet everything on a future nobody believed in, is wagering $100 billion of his own money that it's a bargain. And Jensen Huang's track record of being right is the single most compelling data point in this entire debate. We've looked at the money, the revenue, the margins, the risks, the hidden number, the $100 billion bet. But the real reason NVIDIA dominates isn't the chips. It isn't the financial engineering. It's something invisible. Something Jensen built 20 years ago that every competitor has tried and failed to replicate. Something he gave away for free. Next, CUDA, the secret weapon nobody talks about. The software platform that locks in 4 million developers, creates a $1 trillion moat, and makes it nearly impossible for anyone to challenge NVIDIA. This is the most important tech story that nobody understands. Subscribe now. The next one changes everything you think you know about NVIDIA.